If you Google up the amendments to the bill, there is things in there such as doubling parental pay is a prime example. This would obviously be for everything but maternity, increasing paternity to 6 weeks and including kit days for that, making carers leave payable, having a further unpaid bereavement leave. That was another, but I guess the really big one for me is the whole principle of maternity. So remember, this is an amendment that still has to be read, but they're looking at making maternity paid hourly based on the real living wage rather than the national living wage.
Hello everybody and welcome back to Payroll Question Time for March. I'm sure everyone is happy to be here following the spring statement yesterday, which of course promised no further tax increases, but it did indeed confirm that national insurance contributions are indeed still rising to 15% on salaries above just 5,000, because of course the lower level has indeed been reduced as well. I was kind of hoping I would be waking up to some kind of change of heart, but unfortunately that was not to be. We also learned that Rachel Reeves is committed to her plans whether circumstances change or not. And that doesn't mean all things are quiet for payroll professionals, because she announced 4 new consultations from the HMRC around tax avoidance, compliance and data usage. And I'm sure as we get into those changes over the course of many PQTs, we will help you navigate any questions you may have around those consultations in due course. So, of course, if you have any questions on the spring budget, or indeed any questions whatsoever around the world of payroll, something you are particularly struggling with, an obstacle you need to overcome, that's what our panel are here to help you navigate. So please do put your questions in the questions box and we will ask those in real time. The more challenging, the better. No such thing as a bad question. So whatever it is, do put it in there. Karen's already laughing because she knows she always gets the hardest question that gets put in that box. So there's a challenge to all of you listeners. Try and challenge Karen. Maybe we should change the name of the show. Challenge Karen. We're also going to be holding 2 polls today. So that's your opportunity to get involved in the conversation. We will be commenting on the results of those polls in real time as well. So please do give us your thoughts and opinions. We are, of course, recording the show. So again, you don't need to be busy writing lots of notes. We will send you the slides after the recording, and we'll also send you a survey. I always mention this. It's hugely important. This is your opportunity to tell us what you want us to talk about in the next PQTs to come. So please, if you have any particular subjects, whatever it might be around the world of payroll, this is your chance to let us know, and we'll do our best to discuss them in future shows. Now, last but by no means least, I want to remind everybody that the presentation does not provide definitive answers to individual queries, and in some places takes views on matters which are indeed uncertain. It is therefore not intended to be relied upon in any specific context or as a substitute for seeking advice, legal or otherwise, on a specific circumstance, as of course each case may be different. And we know in the world of payroll, there's a lot of nuance, there's a lot of ambiguity sometimes. That's exactly why that disclaimer is there. I've got Simon laughing now, because sometimes there are 6 answers to just one question. What I'm really happy about is already we've got people putting questions in the box, which is fantastic to see. So please do keep them coming through. Let me just introduce myself. My name is Nick Day. I'm the CEO at JGA Recruitment Group, the host of this wonderful show. JGA, for those not familiar, are a specialist payroll recruitment firm. We operate globally. I'm also the host of the Payroll Podcast, where indeed you can get a copy of this show in audio format and on video on YouTube at a later date if you can't quite make the whole show today. So don't worry. And that's about it for me for the moment. I'm going to introduce the rest of my panel, starting with my left to right. Usually it's Simon, but this time it's Matthew. So Matthew, quick, if you can introduce yourself, please.
Hi, thank you very much, Nick. Excuse me, I'm feeling a little bit under the weather, so I'll mute myself so you don't hear me coughing and spluttering. But I'm Policy and Research Officer at the CIPP. CIPP is obviously the Chartered Institute for Payroll Professionals, here to support everyone through their sort of payroll journey, whether that's education or through the sort of government representation that the policy team does. And yeah, I've got a bit of a background in outsourced payroll and accountancy before that.
Fantastic. And Richard George.
Yeah, good afternoon, everybody. Hope this finds you all well, and it's as sunny where you are as it is here. Richard George, Director of Education at Payroll Centre, UK's largest training business. Like many of my peers, sit on a number of consultation groups, a part of the Award 300, and been in payroll for far too long.
Fantastic. And Simon Parsons.
Yeah, good afternoon, everybody. It's great to be with you again for another edition of Payroll Question Time. I'm Simon Parsons, Director of Compliance Strategies at SD Worx for the United Kingdom and cover Ireland as well. It's been involved in the industry since 1984. I know, look far too young for that. Mainly from an IT background, developing new payroll software, and I deal with government relationships for SD Worx and sit on, as do some of the other guys here, some of the government committees and groups that involve employers, software developers, rep bodies, etc.
Fantastic. And last but by no means least, Karen Thompson.
Good afternoon, everybody. So I'm Karen Thompson. Please be kind. I feel like Saturday Kitchen, where it's heaven or hell. You're going to give me hell, Nick. I'm partner here at Armstrong Watson, firm of accountants based in Cumbria, and I'm in our Carlisle headquarters today. I head up our payroll services. I'm a chartered member, and I have been in payroll for over 30 years. I'm very proud and still really enjoying it, Richard, for the profession. Like Simon, part of the Board 300 and Richard, and also involved in some HMRC and laterally DBT stakeholder forums.
Fantastic. I've just realised, Simon, I would have been 3 years old when you entered the world of payroll. So as you can see for our listeners, we are joined by absolute industry behemoths today. So I would please do keep those questions coming in. Let's find out what we're going to be talking about today then. Today's discussion topics, we are going to be talking about statutory sick pay, employment bills rights and minimum pay, spring statement, of course. There are going to be times for some hot topics, and we're also going to be featuring the latest from the SD Worx Academy. We're going to begin today's conversation with a conversation that's always full of questions and lots to talk about, which is statutory sick pay today. But before I dive straight in, I'm going to start with our listener questions, because we've already got a few come into the box. Let's just keep that slide open for the moment. Interestingly, maybe Callum missed it in my introduction, but just to make sure I'm pretty sure I'm correct, but I'll give it to the payroll experts on the forum. What will the new NI rate be? Karen, so did you get the first question?
Well, for employers, that'll be 15%, and that will apply to Class 1, Class 1A, Class 1B, the lot. So instead of the 13.8, 15, and that will be payable on anything over £5,000.
They have indeed lowered the threshold, which is why the actual cost of employers, I think it averages about 9%, doesn't it? Something like that, but it's quite expensive. So I hope that helps you there, Callum.
Maybe just to mention, they have also increased the small employers relief. So if you're claiming like statutory maternity pay from 103% to 108.5% for those that applies to, and just staying with sort of national insurance bits.
Fantastic. Well, of course, there's also the employment allowance as well, isn't there?
Sorry, Simon.
Yeah, sorry, I didn't know if Karen had mentioned the employment allowance has increased to £10,500, so that'll offset some of that cost rise for most of the small businesses.
I was at the business summit yesterday, where they said the average cost per employee across the board, I don't know where they got this average from, was about £900 per employee with the changes. So yeah, quite significant. Next question we have, I haven't ever done year end, and I'm using QuickBooks to process my year end. Can someone go through what I need to do? Maybe a slightly bigger question there, Seema. So I'm going to take that slightly offline, and I will try and come back to you in the written form. But there may be some brief overviews, maybe we can give a little bit later in the show. So rest assured, we will come back to that question. Are we aware of any other resources like PQT, which of course is a wonderful show covering domestic UK operations that covers international payrolls? I'm looking to expand my knowledge of payrolls in other countries. At the moment, there isn't anything that I'm familiar with, but I would recommend going to the GPA or even to payroll.org, where you can find a lot more about global payrolls. Is anyone else aware of any global similar show?
Not as far as rep bodies, but you will have accountancy providers who specialise in international tax and global payrolls. Perhaps we're not one of them, but there will be others. But Simon, you'll have some, I would have thought.
Mm-hmm. Well, that's right. So we operate throughout Europe, not necessarily globally, but certainly in Europe, we're significantly there. So we'll have resources and libraries. But as you're saying, Karen, PwC do, KPMG do, you'll find others. So you can actually find quite a bit about international countries, summarised by some of the big four and others.
Yeah, absolutely right. How do I find out what the income tax increase or other tax increases regarding payroll will be after the 5th of April, as I would like to put this increase in my forecast?
Yeah. I'll jump in and say there aren't any for income tax. There are no increases, but there are, again, similar to the prior question, there are some resources available for you to use. So ourselves at SD Worx, we publish our UK Knowledge Information Library at payhr.uk. I have my own, payadvice.uk. I'm sure Richard has his, and the CIPP will also have their resources. So there are quite a lot around.
Most of us do a form of tax facts, whether it be a PDF or whatever. And, the freeze is due to stay currently, and that's a very important word after what was said last week, till 2028 at the moment. So principally, there's no expectation. I think also the budget's going to be something like November anyway now, was the date they've set. So realistically, unless something catastrophic happens, it is highly unlikely that we'll see any change till at least then, or understand any change until November.
What you might want to do, though, is consider whilst the tax relief's effectively frozen. So I think if you're looking at where she referred to, the households would be £500 better off. I think you're looking at the forecasting back to 2029-30 that might happen if everything in the statement happens. But what you can look at is, could your workforce benefit from looking at salary sacrifice, for example, your travel and your expenses policies? Are you offering different things? Could you take advantage of trivial benefits legislation, things like that? So I think, but just be careful with salary sacrifice, things like that. You can't take somebody below national minimum wage, and with that going up considerably in April, that's going to catch a lot of people out. But there are things that I think, as Simon said, there are no tax rises, full stop. But you might look at some tax planning for the, obviously your business will look at that, but certainly from employees, have a look at what you're offering and could there be a tax efficient way perhaps of running that, but just be careful to seek independent tax advice.
We've had a couple of sickness pay questions come in. So just for those waiting for me to respond to them, we're going to wait until we get into the SSP section on those, and that makes sense. We're going to be opening that in just a moment. One question left to ask here, which I'll come to you for, Simon, if I may. It's on payrolling benefits. I know we covered that a little bit in some of the previous shows. So it says we are starting this financial year, 25 to 26. If the P11D for 24-25 runs to the 5th of April, do I need to pro-rata the first month so that it runs from the 6th to the 30th of April?
Generally, I'd say no. I think it depends on the circumstance of what you're talking about, because the benefit has probably been reported on the P11D. So if the benefit has already been reported, you don't really have a proration to do because the P11D is full year. But when you go into payrolling in the new year and at the renewal point, you do it through the life of the benefit. That is the general principle. So I think it's an element of thinking a bit slightly different. P11D is 4-year reporting in hindsight, so it's after the event looking back. Payrolling is predicting for the future. So no to the proration, unless you've got an element of benefit you would have reported on the next year's P11D. But certainly you're doing proration when you do the renewal point, because you may only have, I don't know if it was December renewal, 3 months to collect that. So you'll do the benefit over 3 months, or the life of the benefit 12 months, because some of it will carry to a future year. So it is a slightly different way. But so you could say, is that the same as proration? Maybe. I think it's more of a gap is where I'm coming from. So you may have an effect of...
I think Simon's right. So the key difference here is we're not looking at a monthly figure. We are looking at an annual cash equivalent. And because of that, the only variation to what you would have done on P11D is you're breaking that cash equivalent value between the pay periods you have within the year. So that's probably the best way to look at it.
I've seen all three of our panel members nodding as you gave that response, Richard. So maybe we'll move into our first section. Thank you ever so much for the questions. Please do keep them coming through. So first slide for today, we're going to be diving into statutory sick pay. I want to make sure Matthew is on his toes. So Matthew, wondered if you can give me a little bit of an overview of what we're talking about here, please.
Yeah, absolutely. So this forms part of the Employment Rights Bill. So the first thing to be very clear on is that this is not coming into force anytime soon. This isn't coming in next month. So this isn't going to be an April 2025 change, just something that we're looking at for the future. The main change is that it's going to be a day one right and a removal of the waiting days. So currently, you won't get SSP eligibility until you've been off work for at least 4 days. So you've got those 3 waiting days. Those will be gotten rid of, so you can be paid SSP from day one. The other thing that's changing is the removal of the lower earnings limit. So everyone will be paid SSP regardless of earnings level. But there is now going to be a calculation for those who earn under that lower earnings limit, which does mean that there is a possibility that people, when this change comes in, will earn less than the current rate of SSP. However, the government is saying that they've done some calculations to say that no one should really lose out because of the removal of the waiting days. So there's a bit of a balancing act going on with those two things there. Now, on the slide here, we've said that the period for incapacity for work is now 1 day. Now, we have had a little bit of a discussion about that before we started the session today.
Matthew says discussion. I was hearing quite a debate when I joined earlier on, I must say. it was a healthy debate. Isn't the debate?
We were challenging for an opportunity.
Of course you were. Of course you were.
So just to clarify the discussion, the debate, the argument that we had, within the current consultation response that we've got, it's very clear about the removal of those waiting days. What it's not so clear on is whether the period for incapacity for work will be brought down to 1 day as well. Karen and I feel that it's alluded to, but Richard's being a little bit more staunch in the fact that it's not being explicit about that. So we do need to wait for the legislation on this. So this is going to be something that comes out of the back of the Employment Rights Bill when that gets passed and the secondary legislation can be put forward. So for the time being, I'm going to say we don't know on that because realistically we don't. It's a little bit of a grey area at the moment.
Okay. So interestingly, they were saying today, Nick, that we could be looking at autumn 26 before this bill even gets enacted. So it could well be April 27 before we see this. So it's quite a long way down the road in relation to the bill itself, which is quite interesting.
Current estimates for the Employment Rights Bill are sort of late this year for that to be fully passed through Parliament because it's going to go backwards and forwards between the Lords and Commons. It's a huge piece of legislation. But what it does mean is that we can't really start the work on this properly until that's all hashed out and we've got the final amendments on that bill. So the longer that takes, the longer this will take. So, you know, as Richard just said, we were expecting this probably April 2026. However, that's not even guaranteed at the moment because there are going to be some significant changes from a sort of software point of view, from a legislation point of view, that actually the longer that this goes on, it's more likely, as Richard said, it's going to be 2027, but we'll have to wait and see.
I was going to say as well, don't forget with the bill that the Lords are already raising some bits, but I think it's important to recognise that the House has majority. And as Labour have put this bill together, I think it's safe to say perhaps other than tweaks, this bill will pass. It's gone at a rate of knots. Listening to employment lawyers, you know, they're saying it's the fastest they've ever seen. I think Matthew, even in policy, and even Simon and you know, and Richard, all our years, seeing a bill move this quick, you know, impressive, disappointing, but impressive. But with the SSP, you know, again, as you said, Matthew, it'll be interesting to see the devil in the detail, because don't forget as well, SSP and Simon, you'll probably know more, maybe it's social security legislation at the end of the day, and of course they've got, I think, primary and they've got secondary bits to this. But I think one encouraging part, whether you agree with this or you don't, is that the Department for Business and Trade and the policy people involved in this, because there's various people, as you will know, Matthew and Simon, Richard, is that they do seem to be trying to engage. So whether or not we will get the outcome of simplicity that perhaps we're all hoping for, I say that in a positive way, Nick, you'll notice was, but I think it's encouraging that there's a lot of people around the table that are saying, talk to us, tell us what your concerns are. So fingers crossed, whatever does come out will actually be manageable.
I think there's a couple of other things as well. First of all, because it's social security, it means that Northern Ireland have to do this separately. And I know they're being forced through but it doesn't necessarily mean the timing will be the same, or even that the process could be the same. But you would hope it would be. And going, I think, back to Matthew's initial sort of introduction, I think people are still very LEL centric about what this change is, when actually it's a bit of a magic trick, because think about the LEL, it's just gone. It has no part in the new process whatsoever. So in fact, as Matthew alluded to, I use the word allude again because we like that word today. The principal position here is, and I will give you an example, remembering that the rate that's been approved is 80%. You could have an individual who earns £125 a week as a very good example. They are currently over the LEL. They would currently receive full SSP at £116.75. Under the new scheme, 80%, remember it's 80% of pay or SSP, whichever is the lowest. So on those grounds, that individual who earns £125, 80% of their pay is £100. So under the new scheme, they'll only be eligible to £100, where today they're eligible to £116.75. So yes, read the consultation. There'll be 1 to 1.3 million winners who currently receive nothing. But there is therefore also a very large chunk of individuals who are actually going to lose out, which is quite important. Yeah. And I think that communication can be quite challenging.
Without sort of going into the not rhetoric, but what the government will be pushing there is also that because of the removal of the waiting days, yes, you will only be paid £100 for those days, but you will get that from day one. So theoretically, if you have more than one day off, you are not necessarily a loser in that situation. And I think the break-even point for where it becomes worse that you're on that lower amount doesn't kick in until about 3 weeks. So the opportunities where people will realistically be losing out should be limited, but it is definitely something to be aware of, that it will be a lower payment.
I think
I
as
think
well.
I was saying, I think that communication though is going to be a real tough one.
It needs to
like
communicate properly.
It's like moving to payrolling benefits. There's no variation to your percentage of taxation, but it's going to be completely different when you look at it.
I always get a little bit nervous when Simon's this quiet.
Well, I was just about to say as well, I was going to say, Richard, are we grouchy today? But what I was going to say was, don't forget as well, they're also looking at the SSP weekly rate. Now, whether it'll be daily rate, weekly rate, what have you. And what they've said in the amendment that's gone to the Lords was that they're now going to base the weekly rate on the national living wage. What they haven't said is times by how many hours, because obviously people work different full-time equivalent hours. So will it be, well, so we don't know. So we don't, although they're going to base it on national living wage, which is, you assume, will be higher clearly than what they pay now, or what we pay now, but we don't know what that weekly rate will be because we don't have the formula as yet as to what that is going to mean. The one thing, though, that if we do have it, and they do say we're going to base it on 37 times by national living wage rate, at least every year, when we know what the living wage rate is, we can multiply it up and know what the rate's going to be ourselves.
Out of interest, Karen, is it the living wage or is it the real living wage?
Living wage. So the government don't recognise the real living wage.
See, my little cogs are turning, can't you?
I know. You're grouchy to do it.
And that's the element of why you've got the family changes bit, I think, on the slide as well, is because the proposal extends beyond SSP and starts to place it into the realms of paternity, maternity, adoption, shared as well. So I think it's very interesting because there's not been a lot of talk about that, apart from it snuck into proposed amendments to various bills. So
Lib Dems that did that as well.
And being seriously considered. But I think going back to an earlier subject, which is the 15% rise, the Lords rejected it for public sector, didn't they? But of course, the Commons has just bashed it all the way back and said, no, it's 15% across the board. So interesting. I've just had a message from Ben, who works with me. He's actually in the Lords today, so it's going through its second reading. So he's in committee room meetings at 2:30 today on the progression of the Employment Rights Bill. So quite an event for him. Interesting times, but I think we've had a little bit of a bash up beforehand, which was interesting and hopefully useful, because I think it helps with the development of this. Because we've also got the play of the phased return to work legislation as well, and proposals which has been talked about for some years, and I think that's wound into this to the extent that what is phased return to work? And that isn't you can come back for a couple of hours and take the rest of the day off sick. I think so far the indication that they're all talking full days. But at the moment, if you're off for 3 weeks and you have a phased return to work, you've broken your entitlement to SSP because it needs another 4-day PIW. And the intention under this new changes is that it won't, but you can work a day, take a day off, work a day, take a day off. But so far, the indication is they're talking about whole days only, not partial days. But we have to see what comes out. So there was a question, I think, on social media this week. Nick, I don't know if any others saw it, and that was if someone's been off for 5 days and returns in the morning, but the manager sends them over to in the afternoon home because they're still really ill and they're off the next day. Is a doctor's note required, etc., or can they self-certify? There's an element of if they came back, they've broken the sickness, and you sent them home, a new sickness starts the next day, is a sort of the position it is, because and whether you pay them that day or not, it's up to the employer. You have to pay them for the hours they certainly worked, but SSP wise, there is no SSP on that half work day. It's all days.
Brutal, yeah. Simon, finishing with the brutal news. Well, listen, let's come into some questions. Yeah. Obviously, a few questions here, and I'll try and share these around the panel. So the first one is, will the period of incapacity to work still apply when the new SSP rules commence? I think we've covered that a little bit, but I think just worth re-clarifying because it's a complicated subject.
Yeah, so that's what we're waiting on a bit of confirmation for. But as far as we think at the moment, the intention definitely seems to be to reduce that period of incapacity for work period down to 1 day, as Simon was saying there, to allow you to take that sort of day on, day off phased approach to work. So no, it won't apply, but it will in a slightly different way.
Fantastic. This question.
There may be an element, the term PIW disappears because it doesn't have to be multiple days. And I think that's probably where we then start to get into arguments between each other. So there'll be an incapacity day and that qualifies, I think, so then. So does the PIW disappear? Potentially it may.
But the arguments are highly entertaining. So, for those that weren't here earlier, I came into a full-on, okay, so next one. And I'm a little bit disappointed here to hear apparently there's another webinar talking about the same subject. Why do you need any other webinars? Just come to PQT. Anyway, apparently on another webinar earlier today, the PIW, they were told that the PIW is 2 working days rather than 4 calendar days in brackets, and that this PIW still needs to be met to be able to be paid SSP on day 1. Is that correct?
Yeah, they went to the wrong webinar. It's not right.
No, I think what it seems to me that may have been discussed there is that a period of incapacity for work can stretch over days that are not working days. So, for example, if you start being ill on a Friday and you're ill on the Monday, you have generated a period for incapacity for work on those 2 non-working days. However, to say that it's incapacity for work is 2 working days is incorrect unless you're talking about that very specific scenario.
Yeah. Perhaps it was a global webinar about other countries, Nick.
Maybe. Maybe. Well, I think it just goes to prove with a unanimous panel verdict here that this is the place to come if you want to navigate the hardest of the payroll questions. So thank you very much for putting it in the group, because who knows, maybe there are more than one member on that webinar and we don't want people confused. I think it's a pretty unanimous confirmation there that is incorrect. So same confusion I have then, it doesn't explain it. I think I was just commenting on your original responses. Do you think it will go to an hourly rate of SSP?
No. Yes.
No.
In the current proposal,
Nothing to suggest that.
No,
it'd
it's
be
still
hours.
full days. It's going to be days, isn't it? So I wouldn't have thought so.
There's a
then-
slight
But I think
pause
it'll be
in your
8 persons
agreement,
day.
Matthew. All of you went no, and Matthew went
But
no.
then,
So is that a
yeah.
slight pause? Anything in the pause?
But
It's,
then I could
I
then
think-
say, look at the maternity proposal. It all goes
I
horribly
think,
wrong.
as Simon alluded to, we've got the opportunity now for more phased return to works than we had before, with your 4 working day incapacity for work, that you can have a day on and a day off. I think the next stage for potentially improving statutory sick pay would be to allow percentages of days, which I think another country in Europe, maybe one of the Scandinavian countries, do. So you might get a sick note from your doctor that says you are to do a 50% week. So if you normally work 40 hours, you would do 20 hours, and the other 20 would be paid as SSP, or 50% of the SSP rate for the week. And I think that's a logical next step to improve how SSP works and those phased returns to works. However, as we're saying here, there is no current plans to do that. So that's just my thinking of where things could go, but not necessarily where they will go.
And I think people will argue that point for a number of years. But if you're to say if that was accepted as being a reasonable proposal, when would that come in? Give it another 25 years.
It'd be a major admin burden. Yeah, and costs potentially.
Yes.
Hopefully I can answer the next question, which is, hello panel, will there be a webinar to do with neonatal leave and pay? Please advise. I would say that absolutely, Jane, we can cover any subject you wish. Please do fill in the survey you'll get after the show and let us know that's something you'd like us to cover. If there's several people that want us to cover that subject, then we are open to covering whatever you would like us to cover. So please do fill in that survey. Let us know you'd like us to do on a future PQT. We'll try and cover neonatal leave and pay. Maybe we can cover it in our next PQT. There's nothing stopping us at the minute, and we've got a yes from Matthew and a yes from Simon. So
well, I think we've covered it as well before, but we can cover it again because it is complicated.
And if you do have any questions, Jane, or if you missed the previous ones, navigate to the Payroll Podcast, little plug here, because every episode is there. So it's all in month order. You go to the previous episode. I always cover in the show notes what we've covered in the episode. So have a look through previous episodes, and we have indeed covered this before. But by all means, we will cover it again as well.
I think it was the last one. The last episode, I think we covered it, because it is very complex. It was never meant to be, but it is.
So check out February's edition of PQT. It's on YouTube and it's on audio platforms as well. So maybe that's helpful.
And we're still waiting for the guidance, to be honest.
Yes, we're still only with draft guidance, and I think version 6, if I remember rightly. I don't think. But let's put it on the schedule, because sometimes there's a perception, of course, that payments will start from the 6th of April. They won't, because no one will qualify for it on the 6th of April. Baby has to be born on the 6th or after, and you won't qualify for it for another 7 days, because there have to be 7 full days in neonatal care before they qualify. But we can cover that. It would be great. And there is information. So again, let's say on the HR or SD Worx information site, and I'm sure on Matt's as well, there is information on the concept, tier 1, tier 2. And also there's an element of, because we're mixing up old legislation, and that's the thing that we're talking about, this hours SSP is not a realist thing now at the moment, maybe at some future point, and sometimes refer to daily SMP. There's no such thing as daily SMP. It's always a week or paid in part weeks to match the pay period. No daily SMP rate. Some might argue against that, but there isn't. But there's an element of the legislation overlays other stuff. So with neonatal pay, for example, if a mother's baby is born on the 6th of April, goes into neonatal care on the 6th, the full day in neonatal is the 7th. the 7th is the 14th, well, 13th, then payment or entitlement commences on the 14th. What the employers have to think about is what they do for that week, because the statutory doesn't cover it. Statutory covers week 2 entitlements sort of in arrears. So what are you going to do about pay in that circumstance? But with a mother, of course, the current legislation on SMP enforces that maternity leave starts the day after birth at the very latest. They can't get SNCP at that point. It's deferred to the end of their maternity. Father is different. Could be before, during, after.
We've had a couple of comments come in just saying perfect, thanks, really helpful, thanks. Lots of positive commentary on the responses. And the other one saying it wasn't actually a webinar, it was a payroll and rewards brunch. But thank you for clarifying nonetheless. That's super helpful as well. So look, let's jump into a quick poll. Richard is shaking his head. We'll come back to that.
You've just made Richard even grouchier.
Our first poll, which is, will the SSP proposals be a big impact for your business? No impact, small impact, medium impact, big impact, or not appropriate. So fill in those responses. While we're waiting for that to come through, we will obviously comment on the results. We're going to move over to our next section after this, which is going to be the employment rights bill. So if you have any questions around the employment rights bill, around zero-hour contracts, umbrellas, fair workers agency, or anything else, start putting your questions in the questions box now. We can sort of go through those in the correct section in real time. Of course, if you have a question that isn't related to employment rights bill whatsoever and it's about something else in payroll, then that's welcome too. So please do put them in. Just had a quick comment in there saying, thank you, Simon. That was still very helpful. And I'm sure we'll revisit the neonatal leave and pay in a future episode of the show as well. While we're just waiting for these results to go through, I will just mention that there is a new episode of the Payroll Podcast out today. It's how to leverage payroll innovation to drive business growth. It features the very well-known Wendy Muirhead. So if you're interested in payroll innovation and how to drive business growth, that could be an episode you'd like to check out. I'll put a link in the chat in just a moment. And while waiting for me to do that, let's have a look at these results. And I'm going to ask Karen if you can comment on the results when they come through. Let me just see where we are with the poll. So for those in audio only, we've got no impact at 20%, small impact at 31%. This relates, of course, to will the SSP proposals be a big impact for your business? Medium impact 26%, big impact 15%, and not applicable 7%. Karen, what are your thoughts?
I'm not too surprised because, of course, there are still quite a lot of unknowns, but of course, it will depend on what your workforce is made up of. So if you have lots of people where you don't, well, if you, for example, you don't have anybody that is earning below the LEL, then that part of it isn't going to impact you. I do think just looking at that, though, you do need to consider, once we know all the facts, how it might impact with your occupational sick pay scheme if you have one, and how that's going to interact. If it's a day one right, what do you do? With your OSP, but I think given what we know now, I'm not too surprised by those results, if I'm honest.
Anyone else like to comment? Or are we pretty much unanimous on? Are we thinking about this?
Yeah, I think that covers quite a share of probably. I'm presuming the no impacts probably have occupational schemes, and the smalls probably similar that Karen's referring to. Just a quick comment on the subject, Nick.
Sure.
Some of the press has been saying that this change comes in from the 6th of April this year. I think that was based on a press release from Economica, who kind of push out these sorts of government press release type stuff. They're not the government. They're a commentary company. They're incorrect. It doesn't start in April this year.
There you go. It's amazing how much incorrect news is being published, right? This is, you heard it here first. Okay, listen, let's jump into our next section because I know there's going to be some questions around this as well. We're of course, going to be talking about the Employment Rights Bill, zero-hour contracts, agency workers, umbrellas, changing civil to criminal, fair workers agency, and anything else. I'm going to come to Simon for this one. I know this is something that Simon researches in some detail and is very much up to speed with, not just what's happening, but also the naming and shaming. So Simon, over to you.
Okay, I'll briefly go into there and I'm sure we'll expand out. So zero hours contracts have been a concern for the government for some time, prior governments as well to a certain extent. And originally we started seeing changes in zero hours contract terms under the prior Conservative Liberal Democrat coalition. And I've forgotten the name of the chap, and I met him in Wales not so long ago. Sorry, Richard.
What, Nick Clegg?
No, not Nick Clegg, the other chap.
Okay,
the
he's
leader.
other person.
Yes, that was in the DBT or Bays as it was at the time, who brought it in. But in effect, at that point, 0 hours contracts usually had exclusivity clauses. So they didn't guarantee you any work, but you weren't allowed to work for anybody else either. And you had to come in if they called you. And that was kind of changed then. But there's still considered to be malpractice in the 0 hours contract space. Of course, lots of people think it's very good because it allows them to work in the odd hours when they're not looking after children, or they've finished their lecture and they've got a couple of hours spare and they can make themselves available. But I think the reality is they're probably seeing that that's a minority rather than the majority. And ONS statistics show that the average hours worked every week by a 0 hours contractor is 25. So there is an element of why they're on 0 hours. So new rules are coming out that will give people a right to potentially have contracted hours. There is an option potentially to opt out. So people may say, no, I didn't want that. I'm quite happy as I am because I just wanted to fill in, get a bit of money for hobbies and things when it's suited because I'm caring or got other things that I do. And the new rules actually apply to agency workers as well. So it's an element of watch this space, but I'm sure others can fill in some of the gaps on the 0 hours for me as well. Under umbrellas, of course, there's a lot of umbrella malpractice, if I call it that, going on. I'm sure there are some very compliant umbrellas, but apparently 70% of them aren't. They're finding tax avoidance schemes quite often operated or incorrect and underpayments of taxation, which we'll probably cover a little bit when we talk about the spring statement on next steps. So there is a new regime being brought in to govern umbrella schemes and make them. And the tax avoidance named list has got increasingly large. It's back in the days when I started publishing, there were about 25 or 26. You think, how much bigger can this get? I'm thinking at the moment it's probably over 150 firms, and some of those operating in public sector as well. So they're getting in there with nurses, medical staff, other things like that, NHS, local government. Changing civil to criminal. So if you look at the regulations that have been put forward, no longer are some elements of Employment Rights Bill treated as a civil matter. They're actually moved to a criminal matter. So like national minimum wages at the moment, national minimum wage is potentially criminal to pay under national minimum wage. To not pay holiday pay isn't criminal, but it will be under the new Employment Rights Bill, which then moves into the Fair Works Agency creation, which is this new agency which will police minimum wage, holiday pay, sick pay, amongst other things. So those are the certain areas where they feel there is still an element of employment abuse, and with the Labour government obviously there to protect the worker, of proposing to tackle it in some way. That's me done for the moment. I'll let others speak on some elements of the Employment Rights Bill. There's much more, so like day one rights to this and that, protections for maternity, etc.
Well, let me come to Richard then, Director of Education. Obviously, you're going to be involved in that. I think everyone's got a view that they can probably add. So I'm going to just keep it simple. I'll come to you first, Richard, if I may.
Yeah, I think it falls under two sort of tables at the moment, because you do have the consultative parts, but then there was also the amendments to the amendment to the amendment to the bill, which has got some very radical aspects to it. Just filling up Simon's gaps, hire and refire, fire and rehire is also part of the process, making it unfair dismissal, removing the maritime flexibility, which obviously you could use P&O as the example, due to the boats on the move. Basically, it means that there's no requirement for consultation. Taking that further, they're changing collective consultation rules, which are currently set at 20 people minimum per location. That will move to 20 people generally across the board. Where else are we going to go here? The shift pattern models, so having adequate shift pattern timescales of change, but then possibly paying where shifts are removed at very short notice. Simon's already mentioned about the pregnancy support, but then there are other things as well. And as I say, some of them are very radical, especially when we look at parental pay. So if you Google up the amendments to the bill, there is things in there, such as doubling parental pay, is a prime example. This would obviously be for everything but maternity. Increasing paternity to 6 weeks and including kit days for that, making carers leave payable, having a further unpaid bereavement leave was another. But I guess the really big one for me is the whole principle of maternity. So remember, this is an amendment that still has to be read, but they're looking at making maternity paid hourly based on the real living wage rather than the national living wage, which kind of makes you think, is that the government's direction rather than the living wage? And this is just, I'm sure Matthew Karen can add even more, but there are quite literally hundreds of alterations or amendments within the bill. It's just what happens when it happens. Sorry, Matthew.
Does it say real living wage or does it say genuine living wage?
The real living wage. So having a London and remainder of UK rates for maternity.
No,
which is kind of why I challenged the question of Simon's earlier on about using the living wage for SSP. Because perhaps it's just my cogs turning, but why would you use the real living wage for a future maternity change when by rights you'd use the national living wage? So does this mean that the direction of the government is towards the real living wage in the future rather than the national living wage?
I was just asking the clarification there because they used the term genuine living wage with terms of getting
they were very specific because of the London variance on it, Matthew. So absolutely.
Right. Yes. Yeah, it depends where the amendments are coming from at some of the times, but certainly the ones on maternity, paternity, etc. originally that were coming from sort of more the government side referred, I think, to national living wage, which was odd because it didn't refer to national minimum wage either. So there's an element of what's the direction of travel. And I guess there's an element of, is that hourly? And I guess that's a big question mark. Is it hourly or is that really taking what's their normal working week? We could be paid a lot more on that working week basis. What is the living wage, real living wage, whatever this value is, rate? So it isn't what is your normal. I think it's in comparison with the living wage of whatever description, what would apply, and then you may get 80% of that, or 90% would be still on your full pay, etc. It's interesting times because this is all disturbing the flat rate concept.
I think what I would probably add at the moment is, I'm going to be honest, I'm not familiar with what process goes into tabling amendments, whether they can just throw amendments out there willy-nilly and then see what sticks. But we are in the process at the moment of going through those amendments. And Simon mentioned briefly earlier the national insurance rate legislation that was going through Parliament. There were, to be perfectly honest, a few quite insane amendments on there to exclude certain sectors from the national insurance increases. And with the time until the end of the tax year, that just was not going to be feasible for softwares to implement that in time and for people to actually get their heads around who should or shouldn't be paying these new national insurance rates. So I think, quite frankly, that was a little bit insane to try and do that. But basically, all of those amendments were struck down with the reasoning in the on the legislation page stating that it impacted the income to the Treasury or something to that words, basically saying this amendment would have a detrimental impact on the budget set out by the government. So realistically, with the majority that Labour have in government, any amendment that would likely have a material impact on the budget that they have set out is likely to be struck down. So changing any of the rates of parental pay, because we've got the 92% or 108.5% rebate on those amounts, it's very unlikely that they'll allow any of those amendments to go through. And while there's a conversation to happen around them, they're being brought up to start that conversation. Certainly myself and the policy team at the moment, we're really trying to sort of stay a little bit distanced from the employment rights bill until we have a sort of final royal assent on anything that goes through there. Because at the moment, it's kind of just you pick and choose what you think might happen because it might not. So there's a lot of stuff going on. So I think calm for now.
And I think going back to Simon's comment, these amendments to the amendments are to be put in front of the House of Lords. But given, as Simon quite rightly said, the majority that Labour have in the House of Commons mean it probably won't matter anyway. In that respect.
Raspberries is the term that's being used, Richard, that the House of Commons could just blow some raspberries. But I was just, if I'm going to pick up on what Matthew's just said, and I think you're quite right, Matthew. I think it was the Lib Dems that have proposed this £386 a week as a number based on hours. But don't forget, the House, if you look at it politically, might commit to do that, but they might do it from 2030. So, whoever gets the government next, it'll be your problem.
Hot potato.
Let's hold that thought for a minute, because I'm sure there'll be some commentary there. So what I'm going to do is I'm going to open the next poll and see what the audience think, and then we'll go back to the commentary and just the conversation, if that's okay, because I want to try and get this running at the same time and concurrently. So the second poll, of course, is it time then for a thorough business review? 3 options here. Yes, we are reviewing. No, we're not reviewing, or not sure yet, not applicable. And while waiting for those results, Karen, I'm going to come back to you so you can just finish that point. It'll be quite interesting for you just to keep the conversation going while the people listening can have their sort of view at the same time.
Yeah, I mean, we've mentioned the Fair Work Agency. That's the one that concerns me quite a lot, if I'm honest. And it's because I think it's going to want to make an impression. So sometimes, when you're looking at holiday pay, I mean, even the guidance that was put out for the January 24 changes has that big caveat at the front of, this is just guidance. You should seek independent advice. So I'm not sure how the Fair Work Agency, what are they going to base that on? But they will have a lot more powers for naming and shaming. They're also going to be doing things like checking. So also in the employments bill, we're looking at family stuff. If you've got more than 250 employees, you're going to have to publish all your family leave policies on your website. They've also announced, not part of the bill, but it's actually ethnicity reporting again for those with 250, and that does pose, probably, we're working with our HR colleagues, but payroll, we shouldn't, I argue, need somebody's ethnicity for paying them. So there's other stuff, but this will all come under this Fair Work Agency. I just hope that they take, because at the moment it feels that ministers are, jack of all trades, master of none. So with the Fair Work Agency, they're going to have to be very careful that they pull people in from government departments who do know this. If you take, for example, national wage, HMRC do the compliance. Well, if the Fair Work Agency are going to do it, they're going to need educated on how to do this. But I say my worry is they're going to want to make a mark and say, we are here, we're not, we're not going to mess with you. There's some other stuff in the bill that's not necessarily payroll, but did sort of, having listened to some employment lawyers, and it's around things like sexual harassment of employees. And being a bureau, this got me thinking, so it's just my own thought, or an accountancy firm, it says you must take reasonable steps to prevent it within your own business. The bill's changing that to all reasonable steps within your own business, but then it's extending it to third parties. So if I take my own team, we deal with clients. So if a client, then, what might we need to put in place that, make sure that our policies say if a client is, God forbid, rude or sexually explicit in some way that causes offence, that we as a business have to do something about that. And I think it's important to bear in mind that it's not about what the person intended. You know, if we take different age generations, my one back in the day, well, it won't surprise many of you, when I was working at 16, 17, it was perfectly normal for an engineer to smack your backside as you went past. Clearly today that would be unacceptable, and I'm not saying it should have been then, but all these things, time has changed, and what do we need to put in place to do that, to help with all of our workforce. But again, Fair Work Agency, we'll be looking at things like this. What have you got in place? So it's payroll, but it's also the business part of this as well.
I agree, and actually, funny enough, you raised that the last minute about sexual harassment. We've as an agency, we've had to cover the same thing, because obviously we deal with clients like you do, Karen, and we've just booked up training for our entire team and actually entire company, whether you're on the frontline desk speaking to clients or not. And again, it's because you have to take that proactive step to be doing something and training.
It's how the individuals feels, not what was intended.
Yeah, it's really interesting. Well, let's see what the poll results coming up for then, and we'll get the panel's thoughts on these. It's coming up for those in audio only at the moment. Is it time for thorough business review as the question? Yes is 33%, we are reviewing. 44% no, not reviewing, and 23% say not applicable. So what are your thoughts on those? I'll come back to you, Karen. What are your thoughts on these?
I think it depends on who the audience are, who are listening, because no, not reviewing. I would strongly. Now, if you're payroll, yes, we've covered SSP and what have you, and there's more to come. But as a business and/or encouraging colleagues, particularly if you do both, you wear both hats, I would strongly encourage you to at least look at what's in this bill, because as we've said, there may well be tweaks, but this has been put forward by a Labour government who has the majority in the House. So with the exception of some tweaks, these are likely to go through. Yes, the time frame is still in question, but again, this government, are saying that they too want to show that they're making a difference, which politically you can understand. So I would, 44% not reviewing, I would strongly, you should start to be looking at this and planning, or at least working with colleagues, would be my view.
Super. Okay. Well, if we've got no other comments on this, again, pretty far-reach subject again, I think, here. Let's move on to our next part of today's show, which is talking about minimum pay. Changes from the 1st of April 2020. Sorry?
Can I quickly add to what Karen said? I agree with what Karen said, and I think from a HR side, there are some huge changes happening. And as Karen alluded to, a lot of these things are likely to go through. What I have been saying to people is these are likely to be first steps in a number of ways. As we talked about with the SSP and my thoughts on where it potentially could go in the future, I think as businesses, you should probably be thinking of, yes, this is happening now and we can stomach the extra cost or what have you. Where does this go in the future? And are we still able to do that if the next steps are expanded upon? So
yeah, I totally agree. And if you think about the ethnicity and disability pay gap, consultation started last week. So it's coming. It's just when. So perhaps it should have been called the Good Work or possibly Not Working Plan, would have been a better name for it. I don't know.
I'll stick to the payroll education.
Yeah.
I think the challenge we have often with this stuff, Nick, when you discuss it, is we think the business has got it all in hand, so it's all okay, isn't it? But there's an element of the amount of holiday pay schemes that we review as a business, because everybody's caught up with the fact that this Fair Work Agency is going to come after them soon. And they say, yeah, of course we're compliant with the law, just check over the rules. And you look at it, they're not aligned with the working time regulations at all. Some of them, they're a million miles away from it. It's complex areas that people need to have an understanding. And sometimes you're dealing with policies and rules that were set 20 years ago. That might be quite recent, but they're out of date. So there's an element of we need to think what's happening and why, and decide and be prepared for it, because it will impact our business, and it gives us as professionals an opportunity to be a focus for good for our business in the preparation.
Perfect. Okay, good. Let's move over to minimum wage then. Going to come to you, Matthew, if you can again, just give us a bit of an overview. A few subjects again, which are often our listeners are keen to post some questions about when we talk about salary sacrifice or living wage and things like that. So if you have any questions and you're watching this, there's 99 of you, anything at all around minimum pay, put them in the questions box. We will ask our panel. But without further ado, Matthew, if you can give us an overview.
Thank you very much. Yeah, so to go through what's on the screen here, so 1st of April is fast approaching, so pay periods starting on or after the 1st of April, you will need to pay the new national minimum wage rates. As far as the rates go, we've seen some quite large increases in the 16 to 17-year-old rate and the apprentice rate. I believe they went up by about 18%. The 18 to 20-year-old rate went up by about 16 point something percent, 16.4 I want to say, and to give you a bit of a insight into the background, that has increased by quite a large amount, predominantly because the Low Pay Commission has been tasked with making recommendations on the rates in order to remove the discriminatory adult rates aside from the national living wage. The idea is that in the future, all adults 18 and over will be entitled to the national living wage. When that happens, it will obviously mean that quite a large proportion of young workers will receive a large pay rise. So in order to reduce the gap between those two rates, that it's not too much of a shock to the system, they need to increase that 18 to 20-year-old rate by quite a large margin. So expect more of that, if I'm honest. That's not something that's going to be a sort of one and done. It's probably going to be a couple of years in the future. There's no definitive date yet, but that is going to happen at some point in the future. Now, we've been talking about the real living wage. Richard brought it up earlier. That is a completely voluntary scheme. So you can be a real living wage employer and you then have to apply the real living wage rates. Now, what the real living wage is a separate calculation that the government uses, which tries to take into account the actual cost of living. So they have some calculations based on what things cost, what it costs to live in certain areas, and they have their own real living wage. And there are two real living wages. There's an inside of London and an outside of London. So they have an inside London weighting to recognise that the cost of living is indeed higher in London than most other areas of the UK. It's important to remember that is completely distinct and they have separate dates to apply those different rates from. But you can become a real living wage employer if you pay all of your staff above that living wage. There are no age bands with that, so it has to apply to all staff, not just anyone who would have the living wage applied to them. Now, salary sacrifice is something that we've been talking about quite a lot around minimum wage, especially with the increases with national insurance, because if you use salary sacrifice, the employee can save some national insurance, you as an employer can save some national insurance, so it's a win-win all round, especially for things like pensions. You know, you have to do automatic enrolment, why not do a salary sacrifice? You do have to be very aware that salary sacrifice cannot take someone below national minimum wage rates. You need to use the post-salary sacrifice amounts when working out your national minimum wage compliance. And with these big increases to national minimum wage rates, it's very important that you do some reviews at the start of the tax year, because people who were previously above national minimum wage, maybe you're sort of like team leaders, supervisors, that sort of level, who were just slightly above minimum wage, prior years, they may have been salary sacrificing into a pension scheme quite happily and compliantly. But because of those raises in the rates, if you haven't also got their salary to rise in proportion to those raises in national minimum wage rates, you might find yourself falling foul of a non-compliance of dropping them below national minimum wage with the salary sacrifice scheme. So definitely encouraging people to do some reviews at the end of this tax year. But I'll hand over and see if anyone has anything they want to add or if we've got any questions.
It's a pretty thorough review. Simon, anything you'd like to add?
Just a couple of little comments, actually, Nick. There's an element of the real living wage was announced usually October each year, and then employers have 6 months to implement it. which takes it up to May. If you're still on the old real living wage, it will be below the national living wage if you don't make that rise before the 1st of April. So although to remain a real living wage member and meet their rules, you can be in breach. And I think we've even had a press article recently of a real living wage that's been caught breaching national minimum wage. So just to be wary that it doesn't get you off the hook. So although it's higher, its timings are different and its implementation points are different. The other aspect, I guess, on real living wage is it's an hourly rate. National minimum wage isn't. It's a rate you need to receive, and it includes all work time. So if I was contracted to work 20 hours a week and I do a couple of hours extra on real living wage, you can pay the real living wage. But national minimum wage, where is the money for the 2 extra hours? And so there are subtle differences. And so it's an interesting time. We've seen some people reviewing their salary sacrifice schemes, but I wonder if there's an element of, have you undertaken your review? Because you may find that from April, you're breaching national minimum wage by applying it. Now, again, this is quite complicated areas of legislation. And I've got to say, even we've had cases where we actually offer a service that does national minimum wage verification check on the earnings, and people will say this is showing up that they've had we've underpaid. They'll say yes, that's right, okay, I've looked at it, they've got I'll make it up, dental or medical or a bike. And it's sort of, well, that's salary sacrifice, so that's okay then. And they carry on. And there's an element of, it's not okay. You're actually breaching the law, which is potentially criminal. And your senior people could face some form of prosecution for it. The challenge sometimes with these is we can all be happy with it, can't we? It's, well, they agreed to it. They're happy with it. They want to benefit because they want that. The problem is when NMW audit come in, it isn't those people that have complained. They could have been a different complaint altogether. But the NMW audit, soon to be under the Fair Work Agency, look at everyone. They don't look at the complainant. They look at all. And so even though there might be some agreeable, because they really do want to salary sacrifice 75% of their earnings into their pension scheme because they're about to retire, you can't. And they will force you to top up the pay. And so they get double bonus, as it were, because they've got the 75% in their pension scheme, and you've had to pay them as well. So just be wary. And I think this year is significant because the increase is so high that you really do need to look at your salary sacrifice arrangements, your flexible benefits, etc., and make sure that you're complying.
I was going to say, I'm seeing some trends, if I can share, Nick, with national wage going up so much. You've also got to bear in mind, you may find people being brought into auto enrolment that perhaps weren't before, while we've still got the threshold. So that would be new. So, when we've done some forecasting, there are actually some employees who will be national wage who will actually have less net pay if they remain, because of course tax freezes, everything else, you see that. But I think some of the other things we're seeing is, and it's around the sort of the recruitment or even retention part, is when you've got somebody national minimum wage who is, age 21, and they've joined your company and they're entitled to this loan. What do you do with the person who's been there for 5 years and got that 5 years experience, who are also being paid at national minimum wage? So there's this disparity at the moment between what do employers do, and many of them are saying with the NI hikes there's very little that they can do. But the other thing we've seen is, again, taking on board everything that everybody said, I absolutely agree with, is with the salary sacrifice. I mean, I came across one, a new client we were onboarding, and we picked up that their employees they've been taken below national minimum wage. And their view was, yes, but according to salary sacrifice rules, it has to be available to everybody. Yes, it has to be available to everybody to be an effective salary sacrifice scheme, but national minimum wage trumps. And so again, there is still, even today, all these years later, on salary sacrifice, I would just encourage you, if it's not your bag and it's not your area of expertise, seek advice on this, because like Simon, it's not as in payroll that do the national minimum wage compliance checks. We do so far within the payroll, but if you actually want a whole review, we have a team who specialise in that. But the other thing we're seeing is, years ago, I don't know, not even maybe even just first 5, what we found was employers would top up the pay so that somebody they would only do it for the pension part. So they'd say, in order for somebody to remain in salary sacrifice for pension, they'd increase their pay by the amount that they needed to in order for somebody to remain and in salary sacrifice and be glad. We're seeing a complete dropout of that now. Instead, what we're receiving from clients now is, from April, we'll have to take them out of SALSAC. So that is, and what's the shame of that? Because to many it's bonkers, because the employees want to have that NI relief. Many employers do put the NI relief they save back into the pension scheme or into something that's of benefit to the employees on the whole. So it is a shame that these employees will now start to lose out, but I'm afraid, the law is the law and I can't see it changing. So just be very, very mindful of that. The sooner you do a review, particularly if you're with a service provider, if you're looking for a review, bear in mind, seek that now, or if you're in-house, really do have a look and understand what your workforce looks like, because it's not just, you have to explain to those employees why they're being taken out of salary sacrifice, and many don't understand those rules anyway. So plan ahead. I mean, you haven't got a lot of time now, but do plan ahead.
Super. Well, I'm going to take it to the next section. I'm going to let Richard lead us on this, just to move things on. Funnily enough, or surprisingly enough, no questions today. Usually we get quite a few questions around these areas. So maybe we've covered it in such detail either on today's show or previous shows that people are fully up to speed now to navigate some of those changes. But obviously, Spring Statement is very, very live and on real time, only occurred yesterday. Richard, what if you can give us a bit of a summary on what the Spring Statement told us? And there's a couple of other points there in terms of things you might want to bring up, which is what happened to ISAs and where the economy is going. But
can I just say, pick the wrong person, because I've been away the last 2 days, so I haven't picked up on it fully.
No, fair enough. Naturally, I'll come back to Simon. If you'd like to give us the overview.
Well, okay. So yesterday we had the Spring Statement. There's been a lot of speculation over the last few weeks. Because there's been a campaign, a petition to get the tax-free allowance increased, £20,000. We've heard that cash ISAs were going to disappear or be restricted. So we've all got to put our cash money, or for ISAs, into stocks and shares instead to build up the UK economy. So lots of speculation. Would national insurance be changed? Will we get a confirmation on the mandation of payrolling benefits in kind? So I'm kind of taking a payroll view of what was the result of the Spring Statement for payroll change 2025. Oh, there wasn't any. And all right, so what's now being announced in readiness for 2026? Oh, there wasn't any of that either, apart from confirming that the changes such as that are now under Rachel Reeves' headship of the Treasury or as Chancellor, that she's only going to talk about those things once a year, which is in the autumn budget. So that's what we have to look forward to. We've talked about it before, whether that's November or October, December. So look forward to whatever is to be announced there. So where's the economy going? I guess the critical factor of the opposition would be saying is all the predictions from the autumn budget last year have now all halved. So maybe the economy is facing a little bit of a rockier future than thought. Plus, we've got lots of world trouble going on, tariffs being fired off here, there and everywhere, etc. How are they going to impact? However, they're still saying we're on a steady path towards reducing our negative budget, as it were, to be positive by, I think it's about 2029 or so. Carry on and let's hold tight. The ship will get into the harbour eventually. So there'll be disagreements on that. I think the opposition, the Shadow Chancellor would have said, well, We were originally top of the G7. Now we're not. And the forecasts have all halved going forwards. But there were two significant announcements that I saw. Nick, I think you mentioned maybe a couple more. That I think they probably overlap in relation to announcements that are associated with HMRC, which may impact payroll, but not directly. They're more probably about the tax advice market, but some of us are involved in that, or we might be tarred with the same brush, even if we're not involved in that. And there is a number of organisations, obviously, out there actively promoting tax avoidance schemes. And we could say, oh, tax evasion is illegal, tax avoidance isn't. Well, I'm not sure that that's the definition the government used for tax avoidance. I think tax avoidance tend to say it's a construction in such a way fulfilling a purpose that was not the intention of the law. So they'll look to close it down. So they're expanding the DOTAS capability, I think it's called, where they can actually have more legal powers to deal with tax avoidance promoters. So no more investments in Panama or etc., or sending planes to the Isle of Man and other things. But that expands into other stuff. So we've also seen provision recently of stopping tax refund companies performing illegal, as it's now found, because the paperwork's not correct, but refunds for employees where they seem to, for individuals where they're recruiting them to claim refunds, for the refund to be paid to the agent, and the agent's off to the Bahamas, and the individual doesn't see the money, or only sees a token amount of the money because the rest has been dealt with by that tax agent. And I think there are other avoidance schemes going. And we've talked a little bit about some of those sorts of things we see on the periphery as well of salary sacrifice schemes, which seem to be promoting things where we'd actually say, do they really work? Because I don't think they do. And you can have arguments between Queen Counsel or whatever on various elements of whether they work or not. But the government is certainly trying to tackle, or HMRC, what seem to be just paper transactions. So they're not real. It's sort of is it a duck? Does it float? Does it paddle in the water, or is it a chicken? It's kind of just because you call something doesn't make it that. The other element, of course, is the tax advice market and regulating it better. So they're expanding powers, so which could capture payroll. That's my fear. And Matt may know more on this or not than me, but could, requiring us as payroll professionals, certainly if we're offering services to other businesses, not our own company, but to other businesses such as bureaus or a payroll service. And sometimes we as a payroll department, although we may consider ourselves internal, we also just happen to do a couple of payrolls for our franchisees or partners or a neighbouring business as well that are on the premises, that you then have to be regulated, registered, commit to obey the aging code, etc., and potentially open to investigation. Maybe have to have professional membership of some body or other, although that one's a little bit iffy because I don't know that there is one for most of us. There's a membership body, but is there an organisational body? And the powers that HMRC will have to remove our agent approval if they find that we're not acting in the way they want. I've gone on a bit there, Nick.
Couple of things I'll add, only because I was at the Business Leaders Summit in Westminster yesterday, and some really interesting insights given there, which I wasn't aware of, but I think it does impact payroll as well, because it has an impact again on tax revenues. I think you said, where's the economy going? I think one thing I discovered is essentially we're kind of treading water at the minute. Growth is flat, minus 0.1% GDP recently reported. And I think the tax burden is rising, particularly on SMEs. And me and Karen have talked about this. It impacts obviously my business and others. It's certainly dampened entrepreneurial spirit and confidence. And you certainly sensed that in the Business Summit, Leaders Summit yesterday. And I think you're seeing a lot of talent. We're seeing an impact on the talent market already. either people not hiring because of the impact of some of the changes, or those high net worth individuals starting to drift abroad. And there was a really interesting stat yesterday that said that 2024, the UK experienced a significant exodus of millionaires, with 10,800 high net worth individuals leaving the country, which is a 157% increase from the 4,200 it passed in 2023. And that number in 2023 was a record at the time. So it's over doubled. If you're wondering why that's of interest, it's because those people, those 10,800 millionaires, equate to tax contributions of approximately 529,000 average taxpayers. So that's pretty significant in terms of how that rolls back into the UK economy. And obviously, payroll is critical in terms of collecting the tax on behalf of the HMRC through payroll. So I thought there was a few interesting things there. And I thought that that's definitely impacting on the job market. And obviously, that's the optic and lenses that I look through things. Unemployment may remain low at the moment, but hiring is definitely slowing, particularly in private sector service roles. Public sector spending is 45% of GDP at the moment. So I anticipate maybe the roles will appear in public services, but certainly we're seeing potentially in the future, we're going to see fewer pay rises, less job mobility, and probably more pressure to do more with less. So it's going to be an interesting time. That would be my view. And obviously, this is trying to be non-politicized, but just giving you an idea of what was discussed at the summit on how what we're seeing in the world of recruitment and what we're seeing in terms of stating facts on the exodus of millionaires and the speed of growth. So I think it's going to be a few painful times ahead. Karen?
I think there's other sides to it. Think about it. Principally, the net effect of the employer cost change hasn't hit anyone yet.
Not yet.
I think it's quite key. You know, what are people's views going to be at the end of April in comparison to what they are at the end of March? Which I think is quite a key factor. And as you mentioned, the public sector, her key statement is around reducing 15% of cost. Where does that cost come from? I think it's really key.
45% of GDP is government spending, which I thought was a bigger number than I probably anticipated. Maybe everyone was aware of that number, but it was much higher than I thought. There was one other element as well that I thought might be impact from the spring statement, and we haven't discussed it. I don't know if maybe it directly impacts payroll, but I'll bring it up. Which is an extension to the bereavement leave for miscarriages, I saw mentioned. So for those experiencing miscarriage before 24 weeks of pregnancy, I believe, will give parents the right to take the time they need without fear of financial loss. I don't know if that was worth mentioning at all or not.
I would say I was going to also bring up just a bit on the economy. It's not directly payroll at all, but just to give you a feel for the market and to watch out, I think, is it the 2nd of April? So we have a colleague, Richard Cole from Future Money, and he looks at all the markets and investments. So not my bag, but it was really interesting what he said. After the statement yesterday, the markets basically shrugged their shoulders and went, yeah, whatever. There was no surprises. What they're more concerned about is the tariff day, or what's it Trump's called it, the Royal Tariff Day or something like that he's called it. So that, I think, is, well, whilst it's not payroll, clearly it may have a massive impact on the economy, depending when you're looking at trading and everything else. That's our manufacturing, that's, exports and what have you. That then would impact employers and therefore employees and payroll. So I think it's a watch this space for next week, which is not something we would normally talk about on here. No. And yet, here we go.
There's one thing.
The FTSE did slightly drop, didn't it? It didn't go up. And often the good news tends to go positive. It did drop yesterday. So it was, I guess that's an indication of how it was perceived. Matthew?
There was one thing within the spring statement documentation from yesterday, which I think have been briefly discussed before, but might have an impact on sort of payroll businesses. The government are looking to co-opt or steal the idea. Luckily, there's no tariff on ideas that the US and Canada have with a whistleblowing scheme for tax evasion and non-compliance, which essentially could mean that individuals, private citizens, other businesses can whistleblow on organisations and companies that they feel are evading tax and potentially receive a cut of the revenue that HMRC could generate from any subsequent investigations. So I thought that was interesting and might impact some businesses, but hopefully none that are on here because they'll all be fully compliant.
I think that's a consultation. There's a couple of consultations CIPP are involved in as well. I don't know if that's one of them, Matthew, but a few mentioned weren't there.
So
I think if you're going to do it, get a contract signed to get your share and when you'll get it.
Will it be taxed?
Not sure when the plans are for yet, but I don't think that's a current consultation, but we'll wait and see.
Right. Well, look, we've had a question come in, so I want to make sure we tackle this while we still have the time. Comes in from Mark. Says, if someone is receiving a bonus in a month and wishes to increase salary sacrifice pension to 75%, for example, just for that month, which then takes their basic pay below minimum wage, is it okay to still process as per the employee's request, as the bonus is effectively making their pay higher than their minimum wage for that month? Interesting question.
I'm going to say it depends what the bonus is for, because some elements of bonus can be considered pay for national minimum wage purposes. So it may not actually take them below. But if you're sacrificing, and so there's an element of identifying what is earnings for national minimum wage, and just to be clear, premiums aren't, various allowances aren't, but you can have bonus included if it's in relation to the performance of duties. You can even extend a 12th of that to the prior month of that bonus to cover national minimum wage as well, if it is. But be careful. An employee can contribute as much as they like as an employee contribution. It doesn't impact national minimum wage because pensions doesn't. Sometimes it's said that deductions do impact national minimum wage. No, pensions doesn't. It's exempt. Share purchase is exempt, so you can be part of a share incentive plan. Don't affect national minimum wage at all. Payments to a third party unconnected to the employer can be undertaken as well, but anything related to the employer otherwise, you can't. It will actually impact national minimum wage. But as a general principle, just be very careful. Can you say just because they want to, they can? Check what national minimum wage is, the hours, worked hours in that period divided into the earnings that count for national minimum wage purposes. If it's above after the 75% sacrifice, good. If it's not, you're in trouble. And it could be fairly serious, really, if it was reported in court. I think the other aspect is that currently the NMW audits still capture a very high percentage of employers who probably the majority consider that they haven't got a problem to be in breach somewhere or other with national minimum wage regulations.
Super, fantastic. Now, we didn't get to this last time, so we're going to jump into the SD Worx Academy. There is a little bit of a thing I've mentioned, I put it in the chat as a bit of fun, as a payroll song in there, a new one that's come off that we've written that champions the world of payroll. So if you want to buzz up your payroll team on a Friday, it's very catchy, it's new, enjoy. I'm hoping we can get it played at Payroll Congress in Orlando in May. So the more support we can get, the better. And all proceeds, if we make any, whether we will or not, I don't know. The community is big enough for it to, but any pennies that it does make will go to charity. So if you have a look at that, let me know. Be interested to have a look. But let's have a look at the SD Worx Academy, because there are a few courses just around the corner that may be of interest to many of you listeners. The next one, I think, will be the 4th of April, which is salary sacrifice. What is it and why? The 11th of April, then we've got holiday pay, understanding entitlement, accrual, and rolled up pay, often a common topic of conversation. We talked about it on the show here, and I'm sure we'll come to that again on future PQT. 16th of April, UK Payroll 1, so that's income tax and national insurance. And the 17th of April, UK Payroll 2, which covers starters and leavers, student loans, and statutory payments. You can sign up to those courses at the SD Worx website, where Simon and his colleagues will no doubtedly be delivering those wonderful courses. So do check those out. We've had one quick question come in as well, so I'm going to cover that one. We've got a couple of minutes left over. It says, hi, the employee could opt to give up their bonus in exchange for pension. Is that correct?
Yeah.
Thank you.
Same principle
That's what
applies.
we see most commonly asking to do. But as you say, do be careful, as Simon says, make sure you've got your facts right. But that's the most common way that we see people doing it, is they don't actually get the bonus. They ask the employer to make a contribution to their pension scheme instead.
Fabulous. Well, unbelievably, for the first time in many shows, we've just about finished on time. I think it's time for a nice catchy payroll song. Go and get a coffee, have a listen, enjoy. We'll be joining you all for the next PQT on the 25th of April. I'm actually not going to be delivering that show. It's going to be one of my colleagues. I'm going to be in the States that side at that time. So one of my colleagues, I think it's Natalie or Steve, are going to be joining us for PQT. So please give them a warm welcome. Thank you today to Matthew Akrig, Richard George, Simon Parsons and Karen Thompson for giving us a wonderful panel show on Payroll Question Time. I've been your host. My name is Nick Day, and we look forward to bringing you the next show in April, and I look forward to meeting you all myself in May. Brilliant.